Okay, we're live streaming Facebook, LinkedIn, YouTube, and wherever. Thank you, everybody, for clicking in on our Zoom platform and also watching on our various social media platforms. This is Lance Luke and Martin Pea on our Zoom feed, but we're also restreaming on the various social media platforms. Part of Ask the Marketing Expert webinar series, but instead of talking about buildings and construction, we're talking about something that's a hot topic recently called insurance. You ever heard of insurance? Well, sometimes we don't want to talk about it, but there's trouble in paradise, folks. Hawaii's condo insurance crisis. We're in a crisis, whether you like it or not. If you don't own a condo or manage a condo, you may not be so affected, but it may trickle down. So we're going to talk about the spiraling costs and market instability because of this insurance problem, which is a big problem, and understanding the challenges and hopefully trying to find solutions. So this webinar is presented by Construction Management LLC, Construction Management Inspection LLC. And let me advance the slides here. I'm just going to put a plug here. This is me and Jack Canfield, the guy who wrote Chicken Soup for the Soul, sold like over 500 million copies. I just saw Jack in Hollywood, Beverly Hills about a couple of weeks ago. And I said, Jack, what's the secret? He says, well, he just wrote a book with me that became a bestseller. So hopefully it'll sell 500 million copies too. Well, that'll be nice. Okay, so we're going to talk about insurance. If you haven't heard the news, you might be living in a cave, but the insurance for condominium buildings have skyrocketed because of various factors which we're going to discuss. But when we talk about condominium buildings, it's not only high-rise concrete buildings, it's also low-rise townhouse projects and wood frame projects. Insurance companies have been not renewing the insurance policy or jacking up the rates because it's a wood frame building. What's the difference? Well, wood frame building is easier to burn and catch on fire than a concrete one, right? So that's part of the criteria. Now let's go right into it. You may ask, well, how come the premiums are going up? And what's going on? So the insurance premiums, condo associations, and this all has to do with condominiums, not necessarily single family houses. If your property is not in a condo association, you may have a slight increase, but not like in a condo. So for a condo association, lately, and the data that we've been gathering, the insurance premium hikes went from about 300% to 1,300%. It's kind of crazy, right? I'll give you an example or some examples of buildings and associations. And then if you look at comparison of past insurance, what these condo associations were paying last year or the year before to the current, it's really gone up. So here's an example. One condo project of mine that I work with, last year the insurance per year was 400,000. They just got an increase of 1.2 million. Now they don't have that kind of money sitting around in a bank, right? In a savings account. So what did they have to do? They had to take money out of their reserve account to pay for the first premium amount of 400,000 or so, or maybe 600,000. Okay, so what was the what was the downside to that? Well, the downside is they tapped their reserve fund, and as you know, a condominium association reserve fund is money that they collect, and it's a savings account to be used to fix their building, okay? Any kind of repairs and maintenance. Now, what happens when the money's gone because it's used for insurance? Now there's no money to fix the building. And now what? Okay, so the other thing is when a condo board takes money from the reserve fund, they have to put the money back. So in this example, every condo owner got a special assessment to help pay for the insurance. Okay, so that's no fun. And so I'm thinking, okay, you did a special assessment, you assess each owner like $3,000 to help pay for the insurance premium increase. But then look at your reserve fund. You have no money in your reserve fund. So how are you going to get money? There's going to be another special assessment coming down the pipe to raise money to pay for building repairs. Then you might ask, somebody asked, well, can we get a loan? Well, the backstory is they tried to get a construction loan, but the construction lender said, if you don't have 100% insurance coverage, you're not getting a construction loan. So now they could get a construction loan because they have 100% insurance coverage, but their loan amount might be decreased because they can't get a loan for all the money they need. So it becomes a serious problem here. What's the major drivers in this insurance increase? Well, recent natural disasters. We have a lot of hurricanes, wildfires on the mainland. Insurance companies have paid big money to settle all these, and so they're losing money, right? So they have to increase to kind of stay alive, right? All these years they've been collecting premiums, and finally they have to pay out, and now they don't like it. The other thing is the global reinsurance market. So anytime there's an increase, these insurance companies have to go to other companies to get additional insurance to cover a bigger piece of the pie. So not one insurance company. So for example, you have a property and your replacement cost assessment is 100 million. You cannot find one insurance company to insure for 100 million. That's why it's divided up. You may have like 10 different companies taking 1 million each or divided up. Okay, so that's another thing. The more players you have, this increase. And then the impact of climate change on risk assessment, it's just going to get worse. Okay, with the recent wildfires we had and the one in Lahaina, Maui, that really took a toll on these insurance companies. But I'll talk about that in a little bit. What's the impact to condo associations? Financial strain on the association, leading to increased fees for owners, not only maintenance fees, but special assessment and then even a additional fee to pay a loan. Difficulties in budget management and planning, like if you tap your reserve fund, now what? Now you got to figure out how to put money back in the kitty, and there's only two ways to do it: either special assessment or get a loan. There's no way you can increase your maintenance fee enough to cover the shortfall. So for instance, if you're paying $600 a month maintenance fee, to increase your maintenance fee to cover the shortfall, you may be paying $2,000 or $3,000 a month. That's not even feasible, right? So that's why it's going to be a lot of hard work on the part of the board. Examples of associations facing financial hardship, like I mentioned, you tap your reserve fund, you don't have money to begin with, you have a huge increase in insurance, you have to pay for insurance, right? And the insurance is not 70%, 80%. Your insurance has to be 100% replacement costs. And replacement costs goes up every year. And we're talking about if the whole building got blown away or burnt down, what is the replacement cost to replace the building? Now, if you go to a grocery store and you shop for some items, what was the price of these things last year or the year before? It was cheaper, right? That's the same thing with building materials. So naturally, the cost to construct is going to be higher and higher. It doesn't get any lower. If it did get lower, guess what? The cost of labor is higher. So you're still stuck. Okay? Underinsurance is a big growing concern. Right now, there's approximately 400 condo buildings in Hawaii that are underinsured. What does that mean? That means their insurance does not cover full replacement costs. If the building suddenly got blown away in a hurricane and you don't have 100% coverage, that's underinsurance, and then what happens? You can't rebuild. A case study of underinsured buildings. Okay, here's something. Lahaina fire, a condo building, they were insured for 9 million. And then the fire happened and destroyed their building. How much does it cost to rebuild that same condo building today? 14 million. So now what happens? How can they build? They don't have the extra money. And why was the building underinsured? Because over the years, nobody increased the replacement costs, or they never had 100% coverage to begin with. Okay, and there's many situations like that. I'll give an example of a single family house. So let's say you have a single family house and you insured it at 80%, which is 500,000. Okay, if that single family house burnt down, your insurance doesn't cover 100% replacement costs because you only insured it for 80%. Then what happens? You either can't build or you have to come up with the difference out of your own pocket. So that's why, right? And this applies to all single family residents or people who don't own condos. If you own an apartment building, make sure that your building, your home, is insured for 100% replacement cost. There's riders where inflation guards. So if there's an increase in the construction amount, your house is still covered. So no matter what happens, your house is destroyed, you can still rebuild it and you have a new house, right? You're not stuck. There's a risk for underinsurance. You don't have enough funds to rebuild after disaster. I mean, there's situations in Lahaina. There's situations in California where people never had 100% insurance covered. The insurance company paid them, wrote a check. Here's $600,000 to rebuild. I'm sorry your house got burnt down because of the wildfire. And they're stuck. They can't rebuild because to rebuild the same house today costs $800,000. They don't have $200,000 sitting around in the bank that they can go, okay, we're just going to write a check for the difference, right? So they're stuck. That's why a lot of people can't rebuild. The other reason is they probably never got reimbursement for the insurance company. Maybe the insurance company is suing, saying, no, we're not going to cover this or that. It's somebody's fault, right, that this happened. So that's the situation today with Lahaina. Insurance companies have paid out billions of dollars and they want to get reimbursed. That's why they don't agree with this $4 billion settlement that the governor had tried to write up. Okay, legal implications, potential lawsuits from unit owners. Okay, so what happens if your condo is not insured 100%? And in Lahaina, let's say, and now you don't have a place to live. And the unit owners are going, this is not right. Who's responsible? And when they check the board meeting minutes, it says that the board elected not to pay for 100%. So guess what? The unit owners are now suing the board members individually, saying it's because of you made the bad decision not to increase our coverage, and now we don't have a place to live. Okay, so that's there. And I'll talk a little bit more at the end about board member liability. The other thing is the impact on property values and marketability. If you're not 100% insured, your value is not there, and it's hard to sell the property. Okay, and I'll talk a little bit more about that too. Here's challenges for underinsurance. You have a difficulty at times securing affordable secondary market policies. Financial strain from additional insurance policies, increased vulnerability due to financial instability. Well, there's other factors that go into this. What's the impact on the market? What's the market effects? Okay, so if your condo building does not have 100% coverage, and most people say 100% hurricane coverage, but it's 100% general liability, which includes hurricane coverage. Okay, if you do not have 100% coverage, lenders, conventional mortgage lenders like Fannie Mae, Freddie Mac, they're not gonna finance. So let's say you're selling a condo, you own a condo in XYZ building. It does not have 100% hurricane coverage. You're trying to sell your unit. Any buyer who applies for conventional financing, Fannie Mae, Freddie Mac, government-backed financing, they cannot get conventional financing because the lenders are going to say, we're not lending because there's no 100% replacement coverage, 100% insurance. So all of a sudden now, you got thousands of condo units aren't able to be sold because the potential buyers can't get regular financing. They either have to pay cash or they have to get a portfolio loan and some other financing where the interest rate's going to be higher. So you see how damaging this is. And what about the realtors selling these condo units? They're having a hard time. Also, underinsured condo buildings are often blacklisted by lenders, limiting mortgage availability. The blacklist is basically a list that shows the name of the condo building, and it's known that that particular building doesn't have hurricane coverage up to 100%. So it's known in the financial world, in the mortgage lending industry, that stay away because we can't finance this condo. And this includes also other government type loans like VA and FHA. It's getting very difficult. That's why this whole insurance thing is turning the real estate market topsy-turvy, upside down. Condo buyer challenges. You can't get financing. It's very difficult. If you pay off cash, okay, fine. But if you're looking for a loan and the condo building doesn't have 100% insurance coverage, then it's going to be very hard. Also, you're limiting buyers who can afford cash purchases or large down payments. Not everybody has the cash, and not everybody has, 50% down, especially when these condo prices are super high. So can you imagine $600,000 condo? Person can't get conventional financing. They either have to pay cash or put down, 50% or more to get their mortgage interest rate as low as they can. Also, there's a huge impact on first-time buyers and middle-income families. First-time buyers, middle-income families, they don't have huge down payments, right? So it's very hard on them. Very difficult in today's real estate market. Market instability, narrowing pool of eligible buyers. Now you have like a smaller group of buyers that can afford to buy the condo. Potential slowdown in real estate transactions, we're starting to see that now, and then impact sales and market trends. How about reserve studies? You ever heard of the term reserve studies in condominium buildings? Okay, here's the fact. Okay. More than 90% of Oahu high-rise condos are built before 1990. What does that mean? Okay, if you look at this little graph here, you got the majority of buildings that were built in the 60s, 70s, and 80s. What does that mean? That means all these condo buildings are old, right? Or older. And when you have an older building, what happens? The building doesn't last forever. So things break down, things don't work, right? You got to repair your roof, you got concrete spalling, you have to paint every 10 years, waterproof. Your cast iron pipes don't last. Your electrical needs inspection and probably upgrading. So now we have this huge dilemma. That's why this is, when I say there's trouble in paradise, it's not only the insurance issue, it's a reserve study issue. The other thing is most condos, the reserve studies, if they're done correct, and most reserve studies aren't that accurate that I've seen, and even if they were, they're not being followed to a T. The board goes, we don't have money to do this. Let's wait till next year, or hey, let's push this thing back 5 years. We don't have the money to fix the road. How much is the road? $1 million? Oh, we don't have that kind of money, so we're not doing it. Push it off 5 years from now. What about our pipes? Cast iron piping. Well, how many leaks have we have? We have 6 leaks during the past year. Oh, that's not too bad. Let's not do it until 4 years or 5 years from now. Okay, so you have these boards kicking the can down the road, and now these buildings are falling apart. Okay, the other thing is that if you keep having numerous claims of water damage and all that, your insurance company is going to keep jacking up their rates to the point of, we're not going to insure you anymore. Or guess what? Your deductible is now $500,000, any single occurrence. And then you're stuck again, right? So remember, if you live in a condo, read your reserve study and check it out. The other thing to remember is if you kick the can down the road, it's going to cost way more to fix it next year or the following year. It's not going to get any cheaper, right? That's just reality. So if we don't fix our buildings, what's the deferred maintenance and consequences? Well, you neglect essential repairs and updates due to not having enough money. And then it's going to cost you more later. Okay? Common issues: concrete spalling, plumbing updates, electrical systems, your elevators. Some buildings have windows that leak. You need a whole window project. And if you say, well, we're on the board and the windows are the unit owner's responsibility. Okay, well then can you help the owners come up with something? Don't just say, well, it's on you, you fix it, and then there's water infiltration into the building that's damaging the common areas. Also, increase insurance premiums for poorly maintained buildings, or in lieu of an increased insurance premiums, the insurance company is just going to cancel your policy and say, you got too many leaks, or you didn't never fix your building. It's falling apart. So we don't want the liability. If somebody gets hurt, falls off a corroded railing and gets killed, guess what? You're going to go to us to help pay the claim. We don't want that liability. There's a higher risk of costly claims and repairs. Also impact on building safety and resident well-being. Have you heard stories about railings that collapse, or even a whole building that collapse? That's because of deferred maintenance. Okay, the building in Florida, in Surfside near Miami area, that was due to deferred maintenance. Okay, spalling and things like that. It's very scary. Mitigation strategies. What can you do to help the cause? Regular maintenance plans and budgeting. If you're a condo owner or a property manager, you just gotta keep harping on the board. Your job is to fix these things, right? Your job is not to say, we can't fix it because we have no money. Your job as a board member is to figure it out and get the money. Proactive addressing of structural and systematic issues. We're talking about electrical, plumbing, and structural. If your building is spalling, don't think it's just a crack that you can wait until the building's painted. Okay, have somebody inspect it. Case studies of successful maintenance programs. There's buildings that are proactive. They use their reserve funds and they fix their buildings. They have inspections done and everything's good. I'd like to see those where I go to the property and I'm very happy with the way things are. Okay, well maintained. My recommendations for condo associations: strategies to manage costs. Come up with a comprehensive maintenance plan. Address structural, plumbing, electrical issues. Okay, so like I mentioned before, buildings that are model buildings that have fixed their spalling, repiped, their cast iron piping's new, have electrical inspections done and fixed as needed. Those are the top-notch properties, and kudos to those boards who are on it. Okay. The other thing is you have layered insurance policies to achieve 100% coverage despite high costs. So you have multiple insurance companies that are part of the party to get your 100 million insurance policy. You cannot find just one because it's easier for these companies to share a piece. No one wants to stick their neck out and be the only one company insuring one building. It's easier. Some more strategies: strengthen reserve funds, prepare for unexpected premium hikes and major repairs. Best practices for reserve fund management. You always got to review your reserve study. There's different levels of reserve studies. Don't keep doing a level 3, which is no physical site inspection and just number crunching. That's not going to do it. And be an advocate for government changes. Support bills that promote affordable insurance solutions. If you have to send emails, go down to the state capitol, lobby, whatever. There's thousands of condominium owners, and you guys can make a big statement, right? And even the Realtor Association, that's a big company that does good lobbying efforts. So, you know, talk to your insurance people, talk to your real estate people. Practical steps for condo associations. If you're not on the board, let your board members know. You gotta implement recommended strategies, work with your insurance advisors, legal experts, and then engage with the community apartment unit owners. Don't just, if you're on the board, be transparent. Let the unit owners know we have this insurance crisis and we're not making it up. And here's what we're going to do about it. I'm sorry that you have a special assessment, but we have to get insurance. Okay, so if you're a condo board member or a property manager, here's my recommendations. If you're not a condo board member, you still listen because you may want to talk to your condo board member about it. Review and follow the insurance requirements in your condo governing documents. Okay, what does the document say with respect to insurance coverage? Follow the law in Hawaii. And I'm talking about Hawaii law here. If you're tuning in from outside of Hawaii, you have a different law in your set of condos. But in Hawaii, it's HRS 514B, Section 143. HRS is a Hawaii Revised Statutes. This is the the condominium law of the land, okay, that everybody needs to follow. Condo boards are required to follow this law. And what does it say? It says, shall purchase and at all times maintain 100% replacement costs. This is regarding insurance, including coverage for the increased costs of construction due to building code requirements. Now, what does that mean? Simply, it means that you need to maintain, as a condo association, 100% replacement costs. And every year, when the cost goes up, you still need to maintain 100%. Okay, to keep in mind any increased costs due to building code or other requirements. Other requirements could be, is the building safe, right? If not, you have to fix your building so you can maintain your insurance coverage. Now, beware of D&O exclusions. If you're on the board, you're a board member, there's insurance that is protecting you as a director. And if you don't opt for 100% insurance coverage, is your D&O insurance going to cover you for making a bad decision? Failure or omissions to obtain and maintain proper or adequate insurance coverage. You might want to check, like, if I don't opt for 100% and I'm a board member, am I going to be liable if someone sues me? Is my insurance going to protect? Director and officer insurance, okay, as a condo. The question is, what would a reasonable and prudent board member do? Would a reasonable and prudent board member say, we have no money, so therefore we're not going to cover 100%? Okay, that's a big question. In fact, that question is going to be asked if you get sued and you have to go to court. The judge or the opposing attorney is going to say, what would a reasonable and prudent board member do in that situation? What would the board member have done if he followed state law or condo governing documents? You don't want to be put in that position. The following is required by law: standard of care, fiduciary duty. If you're a board member, that's key. If you violate the standard of care or your fiduciary duty, you're going to be guilty, and that's no fun. Conclusion from the building expert: make sure you get your building fixed up and you get 100% insurance coverage. That's the key. What you missed from previous webinars we've given, we talked about insurance, hurricane ties, roofing, electrical, concrete spalling repair. It's on our website. I'll give you the link. What's coming up? We got other webinars coming up for the rest of the year. And then let me check my notes here. We have some interesting webinars coming up. I'm trying to find that. Okay, here we go. What's next? History of major disasters in Hawaii. Historical overview of coastal erosion at Kahana Sunset, which is a condo series of buildings on Maui. Then let's talk BS. Martin and I like to talk BS. Oh, in this case, BS is building safety. Okay, that's a good one. After that, it's build your home to prevent from a wildfire. And that's mainly for Lahaina residents, but it could apply to anyone on the mainland too. And then in December, home safety for the holidays, where I talk about electrical wiring, Christmas trees that could catch on fire, and those kind of things. So tune in to our future webinars. And then here's just some takeaways. Visit our website, askbuildingexpert.now.site. We have, if you go to our website, we have all these other specific websites. They're called expert websites. And We have websites on contractor licensing, building code, roofing, asphalt, concrete spalling, painting, waterproofing, fire, life safety. So we have specific websites for each of these topics. So free information, you don't need to pay. What else is free? We have a bunch of blogs that we write about different construction and real estate things. We have our webinars replay. So I don't know. I think we're about over 100 webinars now that we've given, and every webinar is recorded. We keep the recording. You can watch it on demand. You don't need a Netflix or Disney account. You don't have to pay. We don't charge you monthly. It's all free. Okay. Free is good, right? How about something else free? You go to our website under publications. I got all these books that you can download for free. You may ask, well, what kind of books? How safe is your building? Cast iron drain piping, asphalt construction, reconstruction, senior safety in the home, Lahaina wildfire, monster houses, concrete spalling repair, reserve studies. It's all free, so get it while you can, because at any time we may change that. Oh, if you don't want it free, it's all these books are on Amazon.com, $14.95. So if you want to buy the book, that's fine too. And then here's our new website, condoexpert.now.site. Why did we do this? We did this website because people call us up, email, have questions about condos. And we want to put up this as general information. And it has good stuff in it, so go check it out. And if you get ideas on what else I should add in, let us know. We'd be happy to consider that. So we're at the end. You got questions, we got answers. I'm sure this is a hot topic for insurance for condos. So let me turn it over to Martin, see if we have any questions. That if you're on Zoom, feel free to post your questions in the chat or the Q&A. If you're on any one of our social media, post there, and then let us know, and then we'll be happy to answer your questions. If you don't have a question, you have a comment, that's fine too. You can let us know. So let me turn it over to Martin.
Hey, Lance, you can hear me?
I couldn't initially, but now
You
I can.
couldn't? How come?
I don't know. I think you weren't talking or you're faking.
Oh, sorry, yeah. Okay, we've had a few questions come in from the website side, not the website, but the social side. So let me address them to you. First one we got here is with the drastic increase in insurance premiums, what are some immediate cost-cutting measures or risk mitigation strategies we can implement to help reduce the insurance costs in the short term?
Well, basically, you're stuck. If you get a notice from your insurance company that your premium increase, there's really nothing you can do to lower. You can't like try search around for a lower premium. It's not like shopping where you can go to the next store and look at the same item for cheaper. So you're basically stuck. What you can do to make things better is get your buildings fixed up so you don't have problems with leaks and other issues that could cause cancellation of your policy or increase premiums over and above the high premium that you're paying for. So, and I've talked to a lot of different insurance people and property managers, condo association management companies, and we're basically at the end of the rope here. We're forced to pay the premium and then figure it out later. So the hard part is trying to get the money. It's not like, we have 1 to 2 million sitting in the bank where we can just go, oh, we don't like this increase, but we have to pay it, and we'll just write a check. A lot of insurance companies have increased rates, and condominium associations are scrambling now to provide the coverage. In fact, some boards are even talking about uh, electing to not accept 100% and go at 80%. And I'm on 3 condo boards, and two of my condo board, some of the members say it costs too much. Let's just keep it at 80%. And I told them, well, you better be sure you know what you're talking about, because I don't want to get into a liability issue. If I'm on the board and I voted anything less than 100%, I don't want to be responsible. I rather resign from the board than have that kind of liability, because when you're sued as a board, you can also be sued as an individual person too, not only as a board member, but individually. And so when people know that, they're like, "Are you sure?" I said, "Yeah, you live in your own condo, right? If you get sued individually and you lose, guess what? You basically lose your condo. So better think twice about the liability issue." So sorry, there's really not much that can be done. We're basically stuck, at the mercy of these insurance companies. It was all a domino effect. All these big hurricanes and wildfires and all that, and Lahaina was a big one, and the insurance companies are going, hey, forget this. We're just going to increase the insurance to cover our losses. And that's what's happening. And all the condo associations are at the end of this and having this problem to deal with. And I've even heard some people go, well, we're going to self-insure. I said, well, if you don't have the money to pay for the insurance, you can't self-insure, right? So self-insurance is like, if your building replacement cost is 50 million, then basically self-insurance is that condo association needs to have $50 million in the bank in a savings account, especially denoted for any kind of insurance claim or claim to fix their building or liability. That's never going to happen, right? So anyway, hopefully that answers that question.
Okay, Lance, thank you for that sad but true answer. The next one that's come up here is, are there alternative insurance models or cooperative approaches the condo associations in Hawaii could explore to manage and distribute the risk more effectively given the current market conditions?
Well, let's talk about, okay, the insurance issue got so bad that the government got involved. Okay, so the state started this initiative of doing research to provide insurance coverage to condominium associations. Now, on the mainland, they used this program exclusively, well, mainly for commercial property, and there's an acronym CPACE, which stands for Commercial Property Asset Clean Energy, and it basically was a program made so that these commercial properties could get loan funds to fix up their building, to take advantage of the clean energy, environmental issues, and all that. That's how it started. And then it got amended to adding on more things. So the list got longer, and then the Hawaii government decided to investigate and do studies on how the government could put together a program similar to the CPACE. Well, it's called the Hawaii CPACE or CPACER, and offer the same kind of deal to the Hawaii condo unit owners. Okay, so that's underway. And the whole idea is Hawaii has a hurricane relief fund, and they were gonna use the money from the hurricane fund to use for loans. Now, keep in mind that no matter what you heard in the news or anything like that, this is not free money. It's not a grant. It's still going to be a loan program, right? Is the interest rates going to be super low? I don't think so. It might be competitive with the commercial market, right? So that's something to keep in mind. The other thing to keep in mind is what's the logistics of the program? The program is based on the whole condominium project getting a loan. Okay, and it's a loan, and it's in first position. It's priority. So lien wise, if you already have if your condo already has a construction loan, that lender's not gonna agree to this program because this program is based on them getting first position. So any construction lender who loaned money to the condo building, they're gonna go, no way. I'm in first position now. I'm not gonna be second. So I'm not agreeing to that. So that's gonna be out the window, right? The other thing is that each unit owner is gonna pay their share. So what happens if that unit owner sells the unit? Then the new buyer is gonna have to keep paying their share of their loan, right? It's very sticky. I don't see this really benefiting, although I haven't really seen the nuts and bolts of it, but the way I review things, it doesn't like it's going to be much help, right? And by the time it actually is completed and it can roll out the program, there's a good number of condo associations that already paid big bucks for the insurance already. So I don't know what's going to happen, but we'll see. I mean, that's an effort for the government to try and help the cause, but I'm not. I hate to be optimistic, but I don't know if it's really going to work out, right? So there's too many bugs in the system right now, and it has to be all kind of gone through, and we'll see. There's too many moving parts right now. I mean, it works good for commercial property, one unit owner or one entity, but to have a condo building do something like that, I mean, every single unit owner is going to have to agree and understand how this whole thing's going to work, right? So basically, it's not free money, it's a loan you still got to pay for. If the loan rate is similar to what you pay now, for insurance, it may not be much help, but I think the help is for these condos who can't afford the insurance right now, and maybe this is a last resort for them. Who knows? So I don't have all the answers. You talk to your mortgage people if you need more information. Talk to the state who's working on it. I know there's websites that you can go to get information, but they can't give you everything because nothing's set in stone yet. So it's all like maybe this might happen, maybe not. You look at other programs on the mainland that's been working out. Okay, how do they do it? And then the other thing is how title is held in Hawaii and what kind of property. You have fee simple property, you have leasehold. I mean, there's so many different variables in this. So, and I talked to other mortgage people in the field that know more than I do, or that's what they do every day for a living. So I talk to them and network with them and depend on them to provide me information. I don't do mortgages every day for a living. I do construction and real estate. So, but it's all tied in. It's interesting because our webinars are basically for construction and buildings, and they're like, why are you talking about condo insurance? Well, it's all related. If you drew a diagram, right? building, construction. This building is a condo. What's happening with the condo? It needs repairs, right? They can't repair because they don't have the money. But what happened to the money? I thought they had 400,000 in reserves or 1 million in reserves. Oh, they have to use it for paying the insurance. Oh, okay, so now what? Oh, well, sorry, Lance, we have no money to fix the building, so you don't have a job right now. So it's like, okay, so I mean, this is a trickle-down effect. It affects everybody. Real estate people who are trying to sell condos and they don't have 100% insurance coverage, they're stuck. It's very hard, right? So it's just going to get worse before it gets better, and you can only depend on the government for so much, right? So anyway, that was kind of a long-winded answer, but I think I pretty much gave good facts. So what else we got?
Well, good answer to a very sad and like you say, trickling down situation. So I have one more that came in here on the social, and let me ask you that here. This is, I guess, a particular situation. Our building is currently underinsured, and we're worried about the potential risk this possesses or this poses. What are the best strategies for securing additional coverage without putting too much financial strain on our association's budget? That's a tough one.
Well, I don't have a magic wand. Um, it you're basically stuck. If you're a condo owner that asks a question, there's not much you can do. You need the insurance. The question is not should we get insurance or not, or should we get 100% insurance coverage or less. The question should be, we need 100% insurance coverage. How do we get it? What steps do we take to get it? And go through the avenues. Now, when you buy a car, if you don't pay all cash, there's a financing agreement, right? So typically in insurance, they may offer you, if you tell the insurance company, we don't have all that kind of money. So what can we do? Said, well, we can finance, we can help you finance it. We'll go through this company, right? So that's a way to pay for the insurance. But what happens is the finance company will pay the total insurance, and then you have to pay them, you know, it's like a loan. But if you look at the interest rate of what you're paying and add up at the end of the term how much you paid, it's like a lot of money, right? So the question is, if that's your last straw, then maybe that's what you need to do just to get it in place. Check to see if there's a prepayment penalty. The easiest way, and I know you don't like this idea, is for the board to calculate how much money they need and just to special assess all the owners. That's the easiest and fastest way to raise the money. If you're going to get to finance the insurance premium, you're actually costing the association way more money than asking people to pay their share. Their special assessment is the exact dollar amount of what their insurance premium is. Now, if you have to pay an assessment to pay the interest on your financing agreement, that's even more money. So if you ask me, I wouldn't go for financing. I would just go for assessment. And I know that's kind of rough and coarse. And I realize that there's a lot of condominium unit owners who are seniors or on fixed incomes. They can't afford to pay all these assessments. There's first-time home buyers who just bought. They used all their money for down payment. They don't have extra money for assessments. And there's different scenarios. There's people who maybe were working and now they're part-time. And so there's hardships all around. I totally realize that, right? I'm on 3 condo boards, so I hear it all the time. When it comes time to increase their maintenance fee, I realize that we're not doing it because we want to do it ourselves. We have a duty to maintain the property. So that's the decision we have to make. One of my condos, I voted for 100% reserve fund, and never in the history of the condo have they done that. They always did like 50% or 80% or something like that. So I was sort of like the bad guy trying to want to increase everybody's maintenance fees and all that. But my justification was this, that the cost of everything keeps going up. It doesn't go any lower. And if we don't increase it to 100%, we're not going to have enough money. So for example, 50% funding in a reserve study, your roof costs $100,000 to redo. If you're collecting 50%, when it comes time to do the roof, you're only going to have $50,000. So I told them, where's the other 50,000 going to come from? It's better to increase the reserves, their maintenance fees to cover that, so we don't have to special assess owners. So, and eventually they all agreed. They didn't like it at first, but that's the story of one of the condos. So, we got any other questions or comments?
No, Lance, I don't see any more on this side. I'm not sure if you've seen any on the Zoom, but nothing in
Oh,
the
I
chat.
didn't check on
No, I don't
Zoom.
see anything in the chat, but I know we have the audience out there too. If they do have any questions, I guess you can raise hand or something if you want.
Okay, well, if nobody has any questions, I appreciate you guys attending. I know, let's see, I see homeowners, condo unit owners, I see property manager, I see a mortgage professional. There's a whole bunch of people that I see on our Zoom platform. Thank you for attending. I mean, it's really good. And then those people who are watching or you're going to watch the replay, this is important stuff. I don't have all the answers, but I just wanted to make people aware of the situation. It's really bad. Sometimes when I think about it, it's depressing. But we have to get over it, and we have to survive and get the insurance. And the other thing is, what's going to happen next year with insurance? It's not going to go down. So if you're stuck now, you got to plan for next year. And so can you imagine a condo having to pay this huge increase in insurance, and then yet they got to fix their building up? There's spalling repair, painting, waterproofing. They got to fix their roof. Cast iron piping's not done. Electrical, there's problems. And it all stems back from the early days of we weren't collecting enough. We weren't prudent enough. We're just kind of kicking the can down the road and figuring out, let somebody else do it later. And that's not going to happen. So, and believe it or not, there's a lot of lawsuits where unit owners are suing the board, property management company, for malfeasance and derelict of duties and blah, blah, blah. And how do I know that? I'm expert witness on somebody's litigation cases. It's really bad. So that's what's happening in the future. So protect yourself, be safe, and learn. Get as much information as you can. Talk to experts in the field. Talk to us. We don't hold back. We give you information, whether you like it or not, whether it sounds good or not. We just want to give you information. There's no fake news coming from us. So you know what we tell you is correct. And you can fact check whatever information we provide. You can fact check us. We welcome you to do that. I mean, somebody tried that before. Martin, did I tell you that story? Somebody said, "Oh, you know what you said um, was well, it was the opposite. They were trying to fact check me, and oh, you said this, and then I went on Google Chat GPT, and you know, it's exactly what the guy said." And I said, what source? And they said, "Oh, hold on, let me check." And then um, they asked for the source, and you know who the source was? My name came up. So what happened was ChatGPT pulled information from me, and they used that on a Google search, and I had to laugh. I said, "Oh, okay, well, AI knows who I am. AI got so much information from me. I should be charging them, right?" So anyway, on behalf of Martin and I, ask Building Expert series. Thank you for tuning in. We appreciate it. Your support means a lot to us because that's how we get the energy to keep going. Because so many times we're like, should we keep doing this? You know, but it's worth it. If one person gains information and helps save money and saves them from getting injured or sued, then it's all worth it. Oh, by the way, uh, my new book came out with Jack Canfield, Mindset Matters. If you go to mindsetmatters.now.site, you can pick up a free copy. If you don't want to get it free, you can buy it on Amazon. It's like $22.99 or something. Okay, we're signing off. Thank you very much. Mahalo. See you again.
Mhm.